Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Cardano, taking a look at what has been going on most recently and what I think might actually be happening next here for Cardano's ADA. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, then you are missing a trick. Check it out, linked in the description down below. It's the first place we go to notify you of the ins and the outs of everything that is going on in the crypto space. So why not check it out, linked in the description below. It's completely free and I don't think you'll be disappointed by what you find down there. Okay, Cardano paired up with USDT on the hourly chart, and Binance is the data source. We saw a crash down yesterday, a little bit deeper than expected. I was targeting between 28 and 27 cent, more specifically this yellow box area here, 27.77, 28.84. And the reason for this is I was looking at this as being a kind of the finishing move down here. Now things have changed. We've actually overextended and all those things. So I'm just going to reanalyze where we currently sit with this. Because I do think that we potentially now have to look at it differently than we had done previously, which is okay. It's not the end of the world. It's just a little frustrating. I still think that we are in this kind of finishing kind of structure here. You can kind of see this kind of I guess 𝗕𝗪𝗀𝗧𝗔𝗠𝗠𝗘𝗥𝗦 kind of scenario, okay, and I do think that we've still got to come down just a fraction more to finish it off. So if we go down into this C wave, you can kind of see that we're just here. I was hoping that we'd be done at around the 26 cent level last night, and I think we've got a fraction more to come down here. The lows, the macro Y wave is all the way down here at 22.23. I don't think we're going to hit that, not straight away, but you know, it would be a nice, neat way of saying, okay, we hit that, then we can move on. That could be interesting. And 15.46 cent is lower than there, but we'll talk about that probably in the future if we need to. But for now, I do think that Cardano has just that fraction more to go down. So that's where I kind of expect this weekend to kind of go. But we'll see if we get some overlapping structures and things. So let's go ahead and just dive right down into this. So over this side here, we can see that we ended up with 5 waves coming down. So let's go ahead and map this in. Okay, so we have this kind of 5-wave structure just here. Okay, we then moved on up into this one, and this actually looks okay. It's not too bad. And if I go ahead and draw this in, right in there. Then we come on down. Now this one is also 5-wave structure. So let's go ahead and just find where it is. It's right here. 1, 2. All of this then becomes our wave 3. So this was wave 4 right here. Okay, and then we're looking at this all being wave 5. Now we should have ended here, in my opinion. And it looks like we just overextending down by the looks of it. So as you can see, that 5th wave being really, really large in comparison to a lot of the others. Now, the other way of kind of thinking about this might be that we actually have gone or looking to do this differently. Let me just do one quick check just while I see it here. Let's pull this up to that high. There. Let me just zoom in. It's going to be easier if I zoom in. If I just grab this high point just up here. Okay, we'll throw the fibs on there and we grab this and we put this onto the low on this one right here. There. Oh, come on. There we go. You know, finessing. Okay, so then we move this over to our bounce, which is right on here at our 52.42 cents. And we can see that we would have hit this point just here as our kind of wave 3. So that's going to have to be down here, which is interesting. Then we have wave 4. That just doesn't fit anymore. So I don't think we are in that structure then. So we'll have to be a zigzag pattern coming here, reset, and then zigzag here. So double zigzag instead. So still 5-wave structures, but they are not meeting those impulsive requirements. So 1, 2, 3, 4, and 5. Reset, and then down in 5, I think, up, and then we have this kind of diagonal end. So for the most part, let me go ahead and pull this in. So not WXYXZ, but actually A, B, and C. A, B, and then coming down here into C. Okay, so now that gives us a bit of an area to kind of be thinking about. So let's see where we are. We end with here, we reset up, then we start moving down quite nicely in this range. And then we really do have this one. So yeah, we've got slightly deeper to go here by the looks of it. Let's go ahead and actually take that measurement of this low point right on here. And we take this to the higher area here. Oh, I can get it. There we go. I'm going to zoom in just a fraction further and make sure I definitely get the right wick, which I don't think I did. That one there. There it is. Okay, cool. And if I move this over to our bounce here for the B wave, right on there, then we can see that 24.46 would be our 1-to-1 ratio, and that there might actually tie in with our double zigzag coming down here. So let's go ahead and first of all just put a little horizontal line right here at 26.46, remove this off, then we're going to come in on here. We're going to measure this existing low point at 25.5 up to our wave 3 starting position right here. I'm going to then just draw a dashed line in on this one right here at 27.77, ironically, which is where I thought we should have stopped originally. And then I'll draw in these waves. Okay, so it looks like 1, 2, 3, we go up here, and then we come down to approximately here. We'll measure this to make sure that we are thinking the same thing. And if I come up to 7, 7, right in here, draw the little yellow box on here, and we'll end up, in my opinion, right in here, between 24.99 and 24.19. That there, to me, would make the most amount of sense. It would be a double zigzag pattern in A, B, and C. So basically, you end up with the zigzag here, you end up with a zigzag here, and it's basically 4 5-wave structures put together. Okay, so essentially that then means that our reversal is a little bit lower than expected, which is a little frustrating, but is the area that is currently being kind of shown to us. Now, from our stochastic RSI point of view, if I actually bring this up on the screen here, let me just zoom in a fraction. You can see on the 60-minute chart here, we're progressing back to the overbought area, so we're going to look for a pull to the downside soon. You can see that we're oversold on the 4-hour, the 8-hour, the daily, the weekly, the monthly. We are primed for a bit of a move to the upside. We check the 4-hour, we're looking pretty good. Check the 8-hour, looking good. 12 hours looking good. 16 hours is looking good. The 20 hours looking good. The daily has come all the way down here, but we probably have a few days, weekend probably, to kind of stay down in the lower ranges. And then, of course, the weekly is already in the ground. The monthly is in the ground. So for the most part, we're looking for a bit of a move to the upside, but it just needs to complete the structure first. So I'm not expecting too much this weekend. We might be able to push that a little fraction higher towards the 27 cent before pulling back down towards 24. I don't think we'll hit the 22. If we do, that's a macro bottom down here anyway. So we'll see a very significant surge to the upside from Cardano if that is the case. But for now, I do think that's kind of where we are and where we're heading for Cardano. We've got to be aiming somewhere between the 24 and 22. But I think the structure actually is only really demanding that we come down just that fraction more to the let's just call it 25 to 24 cent. Okay, so in this low range just here. As shown. So yeah, that's kind of where my thoughts are for Cardano's ADA after everything that happened yesterday. I do think that this is the most logical area for Cardano to stop and reverse. It should have been a little bit higher up here, but obviously we've just kind of fallen out of all of those moves. So this is kind of the next logical one that I have. So hopefully this is the one that does stick and we can start to see that move to the upside. But I will say it again, anything lower than 30 cent to me just seems like a really good value for Cardano's ADA. Dollar cost averaging are around here. Got to bear in mind that these bear markets are about building the number of coins. Not too much concern should be given to the dollar value of the portfolio in the bear market. It's all about, are you stacking coins and are those coins growing? Okay. Are those tokens in your wallets going up, not down? Don't worry about the dollar value so much. As long as you're dollar cost averaging and you're lowering your average purchase price, and if your average purchase price for Cardano, in my opinion, is lower than 30 cent, then I think you're going to be doing okay, in my humble opinion. Guys, I'm going to leave this video right there, though. If you have found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in do so, you will stay up to date with absolutely everything that we do here at Cheeky Crypto. But beyond those two things, though, make sure you join us in Discord, linked in the description down below. Guys, until the next one, have a fantastic day.